Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Welcome to yet another edition on the Forex Morning Mastery, your daily dose of financial insight and trading strategies. My own name is Sheriff Daramola, and for the next 30-40 minutes thereabout, I'm going to be your host as we will be taking another fresh new look at the financial market using our basic tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action today. Well, the since the new week, we have been monitoring three financial assets, which includes the USDJPY, the XAUUSD, and of course the US All Spot. And then the last 24 hours, though the market is still trying to find a footing for the week, the US All Spot, we had a sell position which actually turned against us again and then went back into break even. We had the USDJPY, which also is going through a consolidation phase, and the XAUUSD too as well. And of course, this gives us an insight into how the market participants are thinking following um, continuing robust data coming in from the United States economy docket. And yesterday as well, we saw how the PMI services PMI came in at a phenomenal high, um, breaking, coming in beyond expectations, and of course breaking the previous month data. So today we are going to be taking another fresh new look at the market to see how we can strategically position ourselves for the next move. Though for those of us who are with me on both my Trading View and Telegram platform, you definitely must have gotten an update as regards to this. But this morning we will be expatiating on that and see how we can capitalize on the next move. So I do encourage you to exercise patience, stay tuned in, grab your favorite beverages, biscuits or coffee, whatever it is, and stay tuned in so you don't miss out on the valuable ideas we will be talking about today. And for those of you who are joining us for the first time, you are highly welcome on board, and I'm glad to have you around with us this morning. And I know you will be wondering what this is all about. What is it that we really do during the Forex Morning Mastery? Well, first of all, it's important for you to note that the Forex Morning Mastery is a follow-up of the weekend videos I usually share. So during the course of the weekend, I usually share a couple of videos which gives an insight into what I'm looking at for the week and how I'm intending to navigate the financial landscape of those particular assets. Now, during the Forex Morning Mastery, we come here every day to um, do follow-ups and reviews of these assets and see how we can manage if we have any existing position or strategically position ourselves for the next move using our technical tools. And of course, the session officially kickstarts about 8:05 a.m. UTC, 9:05 a.m. West African time. And it's important for you to also note that my aim here in this community is to equip you with the knowledge and skills necessary for you to make your own independent trading decisions. And trust me, the more time you spend with us in this community, the better you get to understand how our analytical approach works and eventually be able to use the information gathered in this community to make your own independent trading decisions. So once again, I welcome you on board and encourage you to actively engage in the comment section. I see your comment, Jonah Aruna. Good morning to you. Glad to have you around with us this morning. So with that being said, we will be diving right into the business. And as usual, the first thing we normally do is to keep tabs with the fundamental factors that will be influencing the market sentiments today. And to do that, we usually visit the economic calendar. And right here on the economic calendar, we usually focus on the um, economic features, which of course we all know that these fundamental factors often manifest on the charts in technical patterns and price movement. And whenever we monitor the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves. In fact, information and timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the assets we are monitoring for this week, we shall be focusing on economic features from both the United States and the Japanese economic docket. Now, for today, Tuesday, February 6th, we do not have any high impactful events, so I went further to include the mid-tier economic features to guide our trading decisions. Now, before I go into today's info, I would like to revisit what our expectations were. As at yesterday, we talked about how we were looking forward to the ISM Services PMI, which gives us an insight into the health of the services sector of the United States, which is considered to be another sensitive sector that tells how well the United States is doing. And the data that came in yesterday was quite awesome, 53.4 as against the expectation of 52, and of course beats the previous data which came in at 50.5. Now, what this simply tells us is that the US economy is quite resilient, and we have been seeing this happen week in, week out, from the GDP to the core PCE. Then we saw the CSI, the Consumer Sentiment Index. We also saw the non-farm payroll reports that came in on Friday, all coming in at a phenomenal figures, further emphasizing the strength of the US economy. And what this simply tells us is that the inflationary pressure in the United States is still high, and the idea of an interest rate cut as early as the month of March has been thrown out of the window right now, as market participants are now settling into the reality of an interest rate at a higher interest rate for a longer period of time. And to further buttress this, we had the speech from the Federal Reserve Chair that was during the course of the weekend, where he also emphasized this. And with this scenario, we are expecting that the US dollar is going to rise. Now, with this expectation in mind, when and how will this rise happen? So this is what we are trying to figure out day in, day out, and see how we can strategically position ourselves for the next move. However, in as much as we expect that the dollar may rise, we cannot ignore the potential that the market can do its thing. Anything can happen in the market even before the news picks it up. It could have happened, and when the news picks it up, they are only relaying to us what has already happened in the past. So that's why we need to be spot on. By using our technical structures, we can easily mark out patterns and structures that we will be using to guide our trading decisions in real time, so that we can actually capitalize on the move even before the news happens. Now, today, Tuesday, February 6th, like I said earlier, we do not have any high impactful event, but we have a couple of speeches, which of course is considered to be another important event that everyone in the market will want to look forward to, at least to hear what they will say, scrutinize their rhetorics to understand the perspective of the Federal Reserve as regards to the US economy. And of course, the speeches will also give us an insight into the Fed's monetary policy stance, then the economic outlook, and of course potential future policy actions. Now, this event here may significantly impact market sentiment, as traders will definitely want to closely monitor and analyze the rhetorics of these officials for cues of the policy directions. Now, the first speech here is from Accra, I think this has happened. It says 12 a.m. GMT, but I'm yet to get any highlight on this one. Actually, my 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 financial feed is not yet updating me on this one. Now, for those of us who do not know, Aka is the executive officer of the 3rd District Federal Reserve Bank of Philadelphia, and is also a voting member of the FOMC, which makes it whatever it says um, carries a lot of weight. Then we also have Mesta. Mesta is having a speech later in the day. That's about 8 to 9 hours from now. And Mesta, she is the CEO of the Federal Reserve Bank of Cleveland branch, and she assumed the role of the president of this branch in 2014. And she's also a member of the FOMC committee too as well. So whatever these officials say today will definitely be giving us an insight into what the um, Fed monetary policy outlook is going to be like. So we look forward to see what they are going to say. And besides this, we really do not have any other event to look forward to. Now, like I usually say, the anticipation of this event usually reflect on the chart as price action, and as technical traders we want to be sniffing through the current charts to see or identify patterns and structures that we will be using to guide our next move. Now, with that being said, let's dive right into the business. Excuse me. So my US all spot usually takes some time. For those of you who have been with me for a while now, you will be familiar with this. So let's wait for a couple of seconds more. And if it doesn't come on, I would have to open a fresh new page. So I guess I'll just have to open a fresh new page. So it's taking quite a while. Okay, finally it loads. So the next asset on our watch list for today is the US All Spot. Now, we did do a top-down analysis on this asset yesterday, where we talked about the technical details from what things are looking like from an holistic perspective going into the daily time frame. We also went further into the 4 hours time frame to have identify a simple setup that we will be using to guide our decisions for this week. Then we also talked about some other fundamental factors behind the scenes, which of course has been driving the sentiment in this market. And most of the factors behind the scenes hasn't really changed at all, as we still have the same thing running in, week out on this particular asset. But it's important for us to also emphasize this, especially for those who are joining us for the first time. And one thing I would like to say here is that if you missed out on our yesterday's session on the US All Spot, where we did a top-down analysis on this asset, I encourage you to watch that video, so you can have a background knowledge of how we got to the point you see on the chart right now. As during the Forex Morning Mastery, we only focus on the 1 hour time frame due to the fact that we'll have limited time to work with for this session. Now, if you missed out on it and you can find the video, the links are right in the description box of this current video. You can easily check them out after this live session to have a detailed understanding of what we did talk about here. Now, going into the chart, we've the geopolitical tensions in the Middle East is still ongoing. we learned about the attack by the retaliatory airstrike by the US military on Friday against Iran's allied military in Syria, in Iraq and Syria, and of course, market participants is still. I think this is what is still stabilizing the oil market at this point in time due to the concerns regarding the oil supply from that region. This is what is still holding price stable. If not for the geopolitical tension, I'm of the opinion that the price of oil will have probably crashed for the to the downside. But as a result of this uncertainty surrounding this market, we can see that price is finding support one way or the other. Now, the other factors here is has to do with the recent slight decline in the US dollar, which of course I think is going through a retracement phase at this point in time, and I think the US oil took advantage of that to break out of that resistant line yesterday. And this also can be seen on the US Treasury bond yield chart too as well. The US Treasury bond yield too also took a little downtick yesterday too as well, and of course we know how related the US dollar and the US Treasury bond yield is. Now, with the way things are going now, which for me I still think whatever trading opportunity we have on these assets, especially surrounding the US dollar, may be a short-term trading opportunity. So let's have that at the back of our mind. Now, as the market seeks fresh catalysts, at this point I think the market is trying to look for fresh impetus, and we can't see any until, besides the API and the EIA, which obviously happens between Tuesday and Wednesday, today and tomorrow. We're also going to be looking forward to the consumer price index and the producer price index from the Chinese economic docket, which is coming up on Thursday. And the reason why we are looking forward to this event is simply because of the fact that China is the second largest consumer of oil in the world. And whatever happens, if the economy of China is doing very well, it is expected that there is going to be a demand for oil. So we look forward to see what that will tell us, and that may give us an insight into the health situation of the Chinese economy. Then we talked about last week how Chinese government, the People's Bank of China, are planning to inject 1 trillion Chinese yuan into the economy to boost liquidity, which I'm not sure this has been established yet. So we're still going to be looking forward, snooping around to get a detailed understanding on that. But for now, let's rely on our technical skills to guide our trading decisions for today. So as it is right now, during our live session yesterday, we talked about a range where price action was initially confined within, that is between the $72.78 level and the $72.20 area, to emphasize the uncertainty in the market at that particular point in time. And usually when we have a range like this, you know how we do it in this community. We exercise patience and wait for price action to either break down the support line of that range to give us an opportunity to sell, or break out of the range to give us an opportunity to buy. And of course, we saw price break down the support line yesterday. In fact, a couple of times. We saw the first breakdown around here. If you missed out on that opportunity, price came back again to break down the second time. And though price moved about, let's see how many pips was that. Price moved about 75 pips thereabout. And trust me, if you had moved your stop losses, you must have been taken out with a reasonable amount of profit, or at a worst case scenario, break even on this particular asset. So the sell position from yesterday did not do very well at all, as we saw engulfing bullish candles spring out of the structure, climbing new highs. And remember what we said here yesterday, that we are not going to consider buying unless price action breaks out of that $72.78 area to capitalize on any opportunity to buy in this market. And we saw price break out of that structure during the later part of the New York session yesterday, and has since been consolidating within a range. Now, with the way things are going right now and the inability of sellers to break through the $72.37 level, I'm of the opinion that we should move all stop losses at this juncture to our entry point. so that we don't get caught up in a scenario where price could still crash further to the downside due to the uncertainty going on in the market right now. So moving our stop loss to the entry point makes quite a lot of sense. So the worst case scenario it will be if sellers resume in this market again will be break even. Now, but if price continues to climb from this level and leads to the breakout of this resistant line of that range at the $73.27 level, we'll look out for more opportunities to buy. So a buy stop order is placed above that area to capitalize on that uptrend move if price action ever breaks out of that structure. So like I said earlier, our trading opportunities is short-term oriented at this point due to the uncertainty surrounding this market, and of course we know that the US dollar appears to be going through a retracement phase at this point in time. So let's be mindful of this. Now, to sell this asset, well, I'm not based on the technical structure here, it will make quite a lot of sense that we sell only if price breaks down the key level at the $72 area, which is right here. Remember our key level right here, but also take note that that key level is also a strong demand zone. Remember what we did yesterday? It's a strong demand zone on the higher time frame. So we'll need some interesting, a significant selling signal for us to join a decline from this point, like series of lower lows and lower highs on our lower time frame. But trust me, I will definitely give you updates on both my trading view and Telegram platform if we find anything of such. But as it is right now, the buy pressure is still looking solid, and in fact we are looking at something that looks like a reversal pattern, though it's not a theoretical one. It's more like a head and shoulder pattern where we still need some significant breakout of structure to emphasize the strength of the buyers in this market, where probably this breakout of this trend line could serve as a neckline of that reversal pattern, breaking out of that structure. And of course you can see how that trend line also, that neckline also shares a confluence with that newly identified resistant line placed at the $73.27 level. So let's see how the market will play out from here. At this point we have a buy position running. Let's see how far this momentum is going to go. But trust me, like I said earlier, I will be with you in the comment section of both my trading view and Telegram platforms to give you updates as at when due. So this is my simple view on the US Oil Spot. If you have any questions, feel free to let me know in the comment section. So as always, I will take the next 5 to 10 seconds off to see if there are any questions before we move on to the next asset on our watch list. And you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. All right. So in the absence of no questions, I want to assume that we are all on the same page here. And in that regard, we shall be moving on to the next asset on our watch list. So the next asset on our watch list for today is the USDJPY. Yesterday we had a couple of buy positions triggered, and we saw the first one went into a worst case scenario break even, while the second one went into a loss. Now, during our live session yesterday, we only had one setup for the buy position, but of course, when I was doing my exclusive price action tutorial, I forgot to share that video. I later realized I never shared that video um, prior to the New York session yesterday this morning. So, but I remember giving an update on both my TradingView and Telegram platform as regards to the new setup on this chart. Now, remember yesterday we did identify a range where price was initially confined within the 148.825 at the 148.275 area, of course, and then we were looking out for either the breakout or the breakdown of that range to give us an opportunity to either buy or sell. But of course, our price never broke down the support line, hereby negating any idea of even considering selling. However, prior to the New York session, I think about an hour into the New York session, I quickly updated this as I begin to notice a potential uptrend continuation pattern using this descending trend line to capture the series of lower highs here right within that range. And then one thing about this trend line is the fact that it beautifully shares a confluence with our key level situated at the 148.500 area. Now, you know how we do it in this community, how we use our key levels. As long as price remains above that key level, we want to be looking out for patterns and structures that supports the idea of buying that asset. Now, with this simple structure here, let me give you a visual representation of what the uptrend continuation pattern was looking like prior to the New York session yesterday. So I was seeing something like this. Something like this was what I was seeing prior to the New York session yesterday, and I did mention in that session that we will be looking forward to the breakout retest of that trend line to capitalize on the uptrend scenario here, which of course happened, and I hope you capitalized on that one. Price broke out retest structure. We saw this engulfing bullish candle spring out of that structure, leading to the second breakout of, so the second trigger had the breakout of the resistance line at the 148.825. And of course, when price moves like this, we move our stop loss, secure the position. But unfortunately, the second buy position went into a loss, while the first one went into a worst case scenario of break even. And since then, price action has been consolidating back into that area, and in fact we have another buy position triggered at this point in time, as price still remains above our key level at the 148.500, still giving us still maintaining that bullish bias in this particular market. So we still hold on to this bullish bias, and let's hope that price action will continue to the upside, breaking more barriers to maximize the potential of this bullish move. And one thing I would like to emphasize here as regards to what is going on behind the scenes, remember a couple of weeks ago, I think a couple of weeks ago, where we talked about the Bank of Japan's governor hawkish remarks as regards to the potential of pivoting from their current ultra loose monetary policy as soon as the month of March through April, which for me is still a glimmer of hope for buyers of this safe haven Japanese yen at this point in time. Then we also have geopolitical tensions in the Middle East, and of course the sluggish recovery of the Chinese economy. All of these factors has a tendency of inciting buying potentials for the Japanese yen. However, if we look at this from a technical structure, I'm of the opinion that the support for the yen may not come unless the breakdown of this 148.275 level is breached. That is, this level is breached to the downside, and if this level can be breached to the downside, obviously price is below our key level, and then we want to be looking out for patterns and structures to sell. So if price can break down the support line, it's obviously a sign that buyers are still finding a barrier around this area, and we could likely see price retrace a little bit to the downside before another wave of bullish momentum will happen. But if the breakdown does not happen, I still think that the resilient US economy will still take a stance on this market. Now, the bearish momentum we saw here in the last, let's say, 12 to 15 hours in this market may be as a result of the retracement of the US Treasury bond yield. I told you yesterday that US Treasury bond yield is quite growing, and we may likely see some profit taking activities going in that particular market as well, which has resulted in this little bit of downtake in the US dollar against the Japanese yen. So the yen took advantage of that space to do some buying activities, which I think will not last based on the nature of this current structure we have on this chart. So let's allow this structure to guide our trading activities for today. As long as price remains above the 148.500, we maintain a bullish bias here and look out for more opportunities to buy if price action breaks out of the 148.825. And the only condition that will make us sell this market, I emphasize this, is that price must break down this level, retest the structure, giving us that confirmation that truly sellers are here to stay. And for those of you who watch my weekend video on the USDJPY, you realize that we're at a very crucial juncture in this market where price action is oscillating at the resistance zone on this chart. This area is a crucial juncture, and the resistance line of that range is that key level we have at the 148.500 area. So if price drops, remember we have a support line around the 148.350, dovetailing to about 200 to 220 pips they're about to catch if price ever drops that far. But at this point, let's maintain this bullish bias, as I'm seeing this consolidation phase having a higher chance of transitioning into an uptrend continuation pattern, where the breakout of the resistance line will be all we need to capitalize on an uptrend continuation. So I still weigh the buyers higher than the sellers at this juncture in time. So let's see how the market will play out, and of course I will definitely be giving you updates from time to time on my TradingView and Telegram platform. And if you have any questions whatsoever, probably you need some further clarifications, feel free to let me know in the comment section, and trust me, I'm here and willing to be of help in that regard. So as usual, I will be taking the next 10 to 15 seconds off to wait and see if there are any questions whatsoever before we move on to the next asset on our watch list. And you can use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. And besides, don't forget to click on that like button. Your thumbs up are very valuable to me. Please that's the only way you can support this channel to grow. So click on that like button, please, and thank you very much. We have over 11 people on board right now, and we have nearly 2 likes. Please do the needful, and thank you very much as you do so. I see your comment made on Hearth. Good morning to you. Glad to have you around. I think this is your first time with us this week, I guess. I didn't see you yesterday. Trust you had a great weekend, and glad to have you around again one more time. So with that being said here, and in the absence of no questions, I want to assume that we are all on the same page, and in that regard we shall be moving on to the next asset on our watch list. So the final asset on our watch list for today is my favorite asset, of course, and that is the XAUUSD, popularly known as the gold spot. And for those of you who are with me on both my TradingView and Telegram platform, you definitely must have gotten an update as regards to this current structure. And we did talk about this in detail yesterday, of course, and we emphasized how it is expected for the US dollar to rise due to the resilient US economy. And we saw how last week the NFP data came in beyond all expectations, further emphasizing the the longer higher interest rates. And of course, we saw how the Federal Reserve Chairman during the course of the weekend emphasized this fact too as well. As at this morning, when I was giving my commentary on these assets on both my TradingView and Telegram platform, remember we had a sell position triggered here yesterday. If you missed out on it, price came back to retest the structure, and during the early hours of today when I was doing my commentary, I think it happened during the Asian session, I already moved my stop loss to break even, and we saw price take us out of that position during the Asian session. Now, this upward movement in price during the Asian session, like I told you earlier, could be influenced by um, the slight decrease in the US Treasury bond yield, which is exerting pressure on the US dollar, thereby providing support for the gold during that point in time. And another thing here is that the market sentiments, of course, that's a fact right now, has shifted to fully discount the possibility of any early interest rate cuts by the Federal Reserve following the resilient US economy at this point. Now, I also mentioned about the recent hawkish commentary from the Federal Reserve Chairman, who implies a commitment to maintaining higher interest rates for an extended period of time due to the inflationary pressure in the United States. And this idea, this perspective is likely going to bolster the US Treasury bond yield. And we all know how interrelated the US Treasury bond yield is with the US dollar. If the Treasury bond yield rises, the dollar definitely will follow suit. And if it drops, the dollar too will follow suit. So at this point, I still think that price will continue to maintain this bearish perspective, especially after considering the fact that price did break down both our ascending trend line and the key level at the $2,035 area at the beginning of the week. Now, for those of you who watch my video on the XAUUSD, remember this ascending trend line was broken at the beginning of the week, and remember how crucial I said this ascending trend line is in my weekend video, where it shares a beautiful confluence with that our key level at a $2,035 area. And for the fact that price broke down both of this structure, that confluence right there, I'm of the opinion that price may continue to maintain that bearish bias. And if you were with us yesterday, I mentioned that we cannot ignore the possibility of price coming back to retest the structures that was broken, that is this ascending trend line or the $2,035 area, to incite a downtrend continuation. So even if buyers push price into this territory, we're still not going to consider buying this asset at all, as price is still within the seller's territory at this juncture. And as it is right now, we have a sell position triggered again. So let's be hopeful that price will continue this momentum to the downside. And if price goes ahead to break down the $2,015 area, which happens to be the lowest point for this week, we shall be adding more sell positions to our existing trade. So we maintain a bearish bias here. We continue to hold on to this bearish bias, and let's see how far this momentum is going to go. However, in as much as we're looking out for selling opportunities, you know how we do it in this community. We always want to keep tapped with the opposite direction as well. Now, what is it that we're going to see here that will make us consider buying this asset? And like I said yesterday, price needs to climb back above that highlighted ascending trend line in red for us to consider buying this asset. And the only condition I would like to see here is price climbing up, breaking above the structure. This is when I can consider buying this asset. So that is why I have a buy stop order above the $2,042 area, and let's be hopeful that things work out according to our plans. And in fact, if we see the opportunity of joining a bullish momentum even before the breakout of the ascending trend line happens, that is, if we see significant trading setup, I will definitely share them with you on both my TradingView and Telegram platform. Now, I already shared the link to the XAUUSD live window, where we usually come together on a daily basis to monitor real-time price action on this particular asset. It's pinned at the top of the chart. You want to click on that link, click on the notify me button so you can get notified as soon as we come on live. So it usually kickstarts about 5 to 10 minutes into the New York session and lasts about 5 to 7 hours depending on the level of trading activities for that day. So I look forward to seeing you guys right during that session too as well. So it's a simple setup we have here on the XAUUSD. So let's maintain this bearish bias here. Price still remains below that trend line and that key level at the $2,035 area. If you have any questions regarding this asset or you need some further clarifications, feel free to let me know in the comment section. So with that being said, I think we have come to the end of the Forex Morning Mastery, but I will take the next 5-10 seconds to see if there are any questions, if you have any questions whatsoever, and then we can go ahead and round off on this one. And please don't forget to click on that like button before you log out, and thank you very much as you do so. So I will wait for some seconds and let's see. All right. So in the absence of no questions, I want to assume that we are all on the same page, and in fact it has been a wonderful moment with you guys today. Though the week has started a little bit slow, it's okay. Market happens like this sometimes. So all we just need to do is be patient and don't get too nervous, or don't allow anxiety to come in at all, and don't, because this can lead you into a level of FOMO that may make you make unjustified trading opportunities. So please, let's keep calm. Let's allow the structures to mature. So we were able to take on 3 of the assets on our watch list for this week on the Forex Morning Mastery, which includes the USOILSPOT, the USDJPY, and of course the XAUUSD, all of which we were able to identify simple trading setups to guide our trading decisions for today. So I do hope you marked out those levels on your chart. If you did, well done to you, kudos to you. So all we just need to do is exercise patience at this juncture and wait for the structure to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding, you do want to be having a well-defined risk management strategy in place to ensure to mitigate against any sudden pullback that may come up against us if price does the opposite of what we think. So with that being said, I want to wish us all the best of luck today. And for those of you who are joining us for the first time, you're highly welcome on board, and I look forward to seeing more of you. I do hope you got to you got 1 or 2 things from today's session, and if you did, you want to be part of tomorrow's session, where we shall be coming back here again to review how well these assets have been doing and prepare ourselves for tomorrow's trading session too as well. Trust me, the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information you gather here to make your own independent trading decision. So on this note, I wish us all the best of luck. I look forward to seeing you all in the comment section of both my Trading View and Telegram platform, and of course during the XAUUSD live window as we continue to monitor price action. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.